Raghavan Seetharaman, Chief Executive Officer at the Doha Bank, who actually will be attending this week's IMF meeting on the debt crisis. Thanks very much for coming in to speak to us.
Morning,
so what are your expectations of the meeting?
Well, it's a defining moment. You have global recoveries at stake. US is not doing well, as expected, in spite of two quantitative easing. Europe is in disintegration, to be precise. Clearly, governing evidence is fiscal prudence is completely out of line. Asian markets, emerging markets are all going to stagflation. So how Arab Spring also going to contribute for the social progression? There are a lot of imbalance in the global growth. Clearly, we need to look at from G20 perspective and try to bring in financial stability so that social stability comes in. That's the very purpose.
And how difficult is it going to be, Mr. Seetharaman? Because there had been some sense that emerging markets were perhaps somewhat immune to the economic crisis that it had hit industrialized countries. You have within the Middle East the Gulf states, which of course have large surpluses because of their oil money, also being somewhat insulated from what was happening elsewhere in the world, particularly in the US and Europe. Is that now starting to change?
Well, we live in an interconnected world. Financial economies are converting as real. Real economies, commodity-driven economies, as you rightly said, the Gulf states, or even mixed economy like India, they have to redefine their scope and performance. They have to face the global shocks which comes from the financial economies, especially G7, G8, whose gross debt to GDP is way beyond the normalcy. Conceptually, this is the reorganization, transformation in the global governance. Again, the political realignment has to take place so that economics comes into perspective. So there has to be a change in the global governance itself. Then the world will have a total stability. Otherwise, it's going to take extraordinary 2 to 3 years to bring this conversion as real.
OPEC Secretary General was just saying, al-Badri was talking about how demand for oil is rising less than expected precisely because of high unemployment over in the US, the sovereign debt crisis in Europe impacting demand. Is this a sign that the troubles in this region are starting to affect the Middle East?
It is. See, the oil price is not a function of demand and supply alone. It's a currency. If you look at 2007, the oil futures went up. That's why $140 per barrel. Again, dollar is getting strengthened. The global recovery is at stake. Essentially, the demand is not more than 89 to 90 million barrels a day. That's not going to have ascending trend for the oil price. And the oil futures are also going down. The dollar is getting strengthened.
So that's going to put pressure on the Gulf countries.
That's right. Whereas gold will go up. See, essentially, the gold is now a currency, not more a commodity anymore. The reserve banks are substituting. The central bankers are trusting gold and silver. So, essentially, that will take an ascending trend, whereas short term, you will have a downturn as far as oil price is concerned.
And what opportunities could there be here in Europe for the wealthy Gulf countries with those large surpluses and sovereign wealth funds? Is there a sense that perhaps Europe could be an attractive investment? Could there be some fairly cheap assets on the market for them?
Sovereign funds are rightly deployed. Countries like Qatar has invested in the consolidation of the Greece banks. And again, multiple sectors, even UK or Germany, they have put in a lot of sovereign funds across the globe. Europe is really an opportunity, and things are cheaper here in terms of corporate takeovers.